What's up, guys? Welcome back to another episode of the Average Money Podcast. In this episode, JJ and I, we're going to kind of like slow things down from what we've been doing. We're still going to be laughing. We're still going to be drinking some beers. It's still Saturday night. But we've been having like these in-depth like bro talks about the market, what's going on with stocks, what's going on in YouTube, what it's like to be a YouTube creator right now in this time where we have no idea what's going on. And the people that are closest to us have been just asking us things like what's going on in the backs of our minds. And I think this was a good opportunity for us, especially with what's going on in the world and politics and everything. We're not going to get into politics, but we just want to just kind of like sit down, and show you kind of like what happens behind the scenes of a content creator in this space and the work-life balance between what we're doing in our personal lives and kind of that dance that we have to dance being YouTube creators as well. And I think that's going to give you a little bit more perspective of who we are, the average people that we are, and really what our fundamental goals are for personal finance. So if you are new to this podcast, welcome. My name is Brad Finn. I am joined every week with Justin, but you can call me JJ Buckner. How we doing, bud?
Oh my gosh. Haven't heard that. I'll tell you this. I hear Justin whenever I'm either in trouble by my mom, and that's about it. I don't know. Or if I'm at like the DMV or something where I got to fill out my papers and I'm like, Justin Buckner, please come up here. Like, that's the only time I ever hear that.
I only thought about it. I knew that your name was Justin, but I think you sent me like bank information or something. You sent me something and it's like, hello, Justin. I was like, oh, that is his name.
Yeah, a lot of people don't know that. And a lot of people don't know this either. My middle name is Lee. If I had $1 every time somebody asked me where the other J comes from.
So you're not you're not even Justin Jr.?
Nope. I am Justin Lee Buckner, but they call me JJ. I have no idea why. It's been something that I literally have been known as JJ since like preschool. So like it was something my parents did. I think something happened at like school or something. So here's the thing. I don't mean to get off topic here, but my family, they all call me Jay. Everyone, my brother, my mom, my dad, my grandma, grandpa, everybody calls me Jay. But somewhere in school or something, my mom said like JJ, another J got added. Everybody just called you JJ. I don't know if like the teacher called me that or what, but then it literally stuck, and I've been JJ ever since.
So it's like if I always think if I ever like need to get your attention, like when you're at 100,000 subscribers now, and I know I'm going to like lose you to the crowd. I know that if I ever when you're up on stage, doing your thing and I need to get your attention, I'm going to scream, Justin, and you'll be like, oh, that must be somebody that really knows me. Justin, it's Brad. Remember me, Justin?
No, if I'm not expecting it and I hear Justin, I may not even answer to it though. Like, and I've had that happen before. Like when somebody is, I don't know, in school or something, and like your name's on their roll or whatever, and somebody will say Justin, hey Justin. I don't even answer to it anymore. It doesn't even sound like my name. But
I figured this was a good start because, like I said, we are going to go a little behind the scenes. So I figured, why not start with a little behind the scenes of Mr. Justin Buckner.
Well, no, it's a good point, man, because like it's going to roll in well to what we're talking about today. I'm going to get a little personal today with some things I've been struggling with the past couple weeks. And I know some people who may be listening right now, they may not be watchers of our channels, but we do have YouTube channels as well. There's just some weird stuff going on right now, man. Like not only just YouTube, but in the market. As an investor, as a longer term investor who has been in the market for 7+ years, investing in stocks and index funds and everything, like I haven't seen anything like I've seen right now. And I've been investing in a bull market my whole life, my whole investing life. Now, obviously I saw what was going on in 08 and 09, but I didn't know anything about the stock market. Now that I look back and I can see things that happened, it's nice to be able to like understand and pinpoint what was going on and see what happened. Like, but now what's going on, it's nerve-wracking because of how involved the newer retail investors are, how much of a change they can have on the market. And this is what also is scary, and we'll get into in a little bit in today's episode, but how YouTubers are affecting the market.
Yeah. And we're not here to like call anybody out and say anything's bad.
No.
And you made today you released a pretty powerful video. We're recording this on Saturday. I'm going to turn this right over. So on Monday, when you're listening, you can go back and check out JJ's video from, I think you released it this morning, but because you called me right after and you're like, oh, was that too much? And it wasn't too much, because this isn't like a YouTube burnout, like that cliche you see, or, I quit YouTube and it's finally time. Like, I don't think we're coming out of a position in this, but as people that have been on YouTube, not even a long time, but multiple years, we've definitely seen things change, and we've seen the type of investors. And I notice it most, and I'm not speaking for you, but I notice it most in the comment section. The questions that I used to get 2 years ago versus the questions that I get, and just people sometimes, and even the hate comments where you feel like people are just reading off a website or reading off like the responses from certain places, and you're like, you didn't even come up with that hate. Like, if you're going to troll on me and hate on me, at least come up with like an original thought. And as two average guys that fundamentally are built around index fund investing and the boring, non-sexy thing. And I think we're both guilty a little bit of, over the last couple of years, what we're presenting to the public. We talk so much about social media manipulating us as viewers, right? But we're starting, I think this was like the fear that we had, and like the point that we're trying to make is we're starting to see that the YouTube algorithm has almost manipulated us and the content that we make.
100%, man. Like, I mean, as a content creator right now, you're not going to get views making an index fund video. You're just not. And I mentioned this in that video a little bit, but what sucks for me, and I'm not trying to be like, oh, woe's me, but here's my thing. Like, YouTube feeds my family. Like, that is what my full-time income is. And I'm not financially independent. Like, I have money coming in from investments, but I don't have enough coming in case YouTube income would completely stop. Like, I would have to figure out something else to do. So this is the crappy part about being a creator is, for example, like Brad said, I would say a majority of the percentage of my overall net worth portfolio is in index funds. And then I would probably say that after that, it would be, real estate, but also dividend stocks and like longer term growth stocks. But no one wants to watch that either right now. There's so many people in today's market with the influx, and we have seen such a huge influx in views, and there's been an influx of new beginners come in to the stock market because they're seeing what's going on. Their buddies saying, hey, I just bought into this cheap penny stock and it 3x'd my money. Well, yeah, I mean, it's because there's so many people coming in. But here's the scary part. It's going to end soon. Or maybe not soon, but it's going to end at some point. There's going to be a point in time where the correction happens, and there's going to be either one of two things that happens within the next, couple years, whenever this, market changes, is we're going to have a sudden, crazy crash like we had back in March, but it's not going to come back up like it did unless the Fed prints more money or whatever it is. Or we're going to have a slow, gradual decline in the stock market for multiple years. Now
and that's almost worse, right?
Well, yeah, because think about that for a second. Everyone freaked out in March because of the crash, which, to be honest, I was buying up as much shit as I could. I was like, hell yeah, baby, I haven't seen these sales in forever.
Exactly.
But I was so surprised. I actually remember to this day, Millie, my daughter, was born on March 25th. The bottom of the market hit March 26th. I was in the hospital being a stock market content creator, watching CNBC every single morning, watching the market just tank. And, I wouldn't change it for the world, but I'm stuck in this hospital. I'm like, I need to be making content on this, but I couldn't. And it was so crazy what was happening. And it was so crazy how fast the market came back up. And now it's even, here's the crazy part. When you look back at the peak before March, so like February time, if you look at like an S&P 500 chart, the peak of the market, I remember we were at all-time highs. Everyone's saying the market's overvalued. The PE of the S&P 500, it's never been this high, la-di-da-di-da. And then we have this drop, and then the market shoots back up. And now, look at where the peak is. Compared to where we thought the peak was just less than a year ago. You know why? A lot of it is because of the increase of the amount of money that is becoming out into our economy is insane. Now, I don't want to say like this, like people need the money. I get it. I understand that. But what's happening is all, I mean, you see the comments all the time. Hey, I got my stimulus check. What do I need to, what should I be throwing in the market to double this sucker? Like, what? What?
And
I came prepared today, Brad. There's a lot I need to get off my chest in today's episode if you can't tell.
No, it's fine because these, once again, and we've mentioned it before, these are the conversations that we have between us that we needed to press record for. And this isn't a video like about, this isn't a Graham Stephan video, the crash of 20, like we don't know when it's going to be and we don't really care. Like we don't care because we're prepared, and it's unbelievable. And back to like what I was saying with the comments that I hear right now, if your portfolio doesn't return you 50% a year, you feel like you're a screw up. Where 3 years ago, we were talking about, if you want to be conservative, we talk 6 to 8% returns a year.
Wow.
If you want to boost it up a little, you can maybe say 10. But now the expectations of that people have, and whether this is Robinhood and other apps like it, and the internet really just bringing everything to the forefront, regardless of what it is, and regardless of whether the market is overvalued, undervalued, like it still needs to be mentioned that regardless of when the dip or the recovery or whatever's going to happen, whether it's 10 years from now, people need to understand how to cope with that when it happens. And they need to be prepared for what they're going to do when it happens. And like you mentioned, so many people think this is like putting $100 on black or asking what number is most likely to hit in roulette and thinking that they're going to come home millionaires. And this happens with stocks, or Bitcoin. Well, we don't know what it is. That's the thing. We have no idea what the hell happened to index fund investing. Like what happened to VTSAX? What happened to it?
Here's the thing. I still think a lot of people are putting money into index funds, but it's through like your 401k. It's through, like it's on those automatic, just an increase in money going into it every single month or every single week, whatever it may be. So I still think people are investing in index funds, but I think a lot more people are coming out of the woodworks that have never invested in the market before. And they're like, how do I make some money, baby? Let's go. And that's kind of what we're seeing on YouTube right now. And I'll be honest with you guys, like this kind of goes back to like being that creator and needing to like get the views and chasing the views as you get caught up in this. And I was making content solely around YOLO plays. That's the best way to call them in the market right now is, it's the risky moves where you're looking for the next big jump. You're looking for the next big jump in price. And let me be honest with you. Anyone right now could start a stock market channel and say, here are 3 stocks that I think are going to go up in the next 2 weeks. And most likely you're going to be right. You know why? Because everything is moving up right now.
Everything goes up.
A monkey can throw a dart at the dartboard with stocks located around it and pick 3 stocks that will go up 10% plus. That is why one reason we're seeing such a huge increase of content creators, which I love it. Like the more the merrier, but we're also seeing a large increase of YouTubers that are promoting nonstop. Just
every stock can't be a 5x stock.
No, man. And this is the thing, like everyone's promoting this is the next 500% stock, 10x your money, double your money, whatever it may be. But, and I got caught up in that because I saw the views. I saw those creators that getting those views and I was like, well, crap, I need to switch it up. I need to change it up. My stuff's old. Nobody wants to watch me anymore. And that's what sucks, man, is like having that worry of having to get the views to make the money to be able to pay my mortgage, to pay my, put food on the table, whatever it may be. I'm constantly stressing about, okay, I need to stick with the algorithm. The algorithm's, pushing this type of content. But here's to kind of sum this part up is I've announced, like what I've been doing. I noticed that I've had a switch in content, and I was doing a Robinhood challenge. So I was showing all the stocks in my Robinhood portfolio, but that's all I was showing. I wasn't showing my Fidelity account, whereas all my long-term plays. I wasn't showing all my retirement accounts or my other accounts I have set up with Vanguard that are literally all in index funds. So these newer beginner investors were coming in, and think about this for a second. You're a new beginner investor. Maybe there's some beginner investors out there who listen to the podcast, and you are watching my videos, right? You're watching other content creators' videos, and all you see are these big spec plays. The new spec coming out, what's going to 10x, the penny stocks that's going to blow up your account and just, shoot to the moon. That if that's all you see, that's all you're going to know in the market, and that's all you're going to invest in. In return, when the market turns around and either crashes or we have this slow bull market that just gets redder and redder and redder every single day, it's going to scare off those beginner investors. And here's a point I really want to make. And Brad, I know you will agree with me, and I know you think the same way because we've had many conversations. But I truly care about every single person that watches my videos. And I always stress to the max that I'm making my point solid, that I'm promoting the correct way, because I want my beginner investors out there to understand what I'm talking about, but also to be able to further advance their learning down the road. But here's what happens if all of us content creators are talking about penny stocks and SPACs and the next stock that's going to 10x. Excuse me. As soon as the market takes that correction, those beginner investors are going to get burned because they have that's the only way they know. What that's going to do is that's going to scare them off from ever investing in the stock market again, because all they know is putting their money in and it going away. Whether the penny stock company went bankrupt, or they panic sold because they lost 50% in one day, whatever that may be. And some of these beginner investors put trust in YouTubers, which I don't say anyone should ever do. But the fact that people are trusting you, which I will never tell anyone to ever go buy a stock. Like, you're your own adult, you need to make your own decisions to buy the stock. But with that being said, there are some creators out there that are saying, buy this stock,
load up on this stock today.
Load up on this stock. And what's crazy is there's so much trust out there to influencers that there could be a beginner investor who maybe he has, 20 grand in the bank in his life savings. And he goes, oh man, this guy said it's going to double. It's got to double. He knows what he's talking about. He's a YouTuber with, 100,000+ subscribers and 100,000 subscribers. And the crazy thing is if that happens, the market tanks, the guy loses his life savings on that once, which again, you're your own adult, you need to make your own decisions. But the fact that could be happening by telling people to invest in stocks, I don't know, man. The YouTube space right now is just, the stock YouTube space is weird. I don't like it. I want it to change. I want it to go back to talking about my 7 favorite dividend stocks and,
And
what do you think, Brad?
And we're not putting ourselves on a pedestal.
Thank you.
We're saying that there's a piece of us that's a little bit a part of the problem. And I think it's more of us identifying that at the end of the day, we're not putting ourselves on a pedestal. All we're saying is that we're starting to look in the mirror and say, I'm really not proud of that video, or I wouldn't send that to my wife's friend if they needed advice on something, or, and I've been fortunate enough where this is not. So I'm giving my perspective of YouTube not being my full-time career. And my YouTube channel, we started our channels about the same time. And we've joked before, at one time I had more subscribers than you, way back when it was under 1,000. But my channel has definitely grown slower, I think, because I did spend so much time on index funds. And I did spend so much time talking about Vanguards and Roth IRAs and 457s and 403Bs.
The non-sexy stuff.
Yeah, I really did. And then, I dabble and then I get views and I get a big pop and I'm like, oh my God.
It's amazing though, isn't it?
Yeah.
It feels good. And that's another thing that sucks about a creator.
And
Go
we
ahead.
also,
Sorry,
no, it's fine. And we also too, and I'm thinking of a bunch of points that you made. Like, obviously, I think a lot of us creators, we come out and make ourselves feel better by saying, this is just entertainment value only and don't listen to a YouTuber. But we'd be naive to think that there aren't people out there that really do trust what we say is gospel. And at the end of the day, that's something that I really, really, I think about a lot. And the point that you made too, and you said it like really, the fact that we can scare, that's our main thing. I'm not necessarily even worried about people losing money because there's inherent risk in the stock market and people are going to lose money. I've lost money. We lost money.
Same.
But I think that fear of scaring people away from ever and putting a bad taste in their mouth because there's inherent risk and we're all going to lose money. The stock market's going to go down. But with our background in education and our life experience, if it does go down, in March, we weren't worried. We weren't part of the group that was worried. We joked and said everything's on sale. But if you started if you did 2020 New Year, New Me, and you started investing and you got into speculative investments, and for 3 months or 2 months you started dumping in money, it was evaporated. It was deleted by April. And I know from personal experience, so many people that I had to walk off the ledge in April, May, and June and tell them to get back in the water because they were so afraid. And they were like, this is BS. This is gambling. This is what everybody says it is. And I don't think, and yeah, at the end of the day, I started feeling like part of that problem. And I'm still very proud of the videos that I make. And I think you are too. I just think we need to go back to incorporating what our true values are, regardless of, views, and because we are manipulated. We are manipulated by the YouTube algorithm. We look at that when they created that one, they ranked, for those of you that aren't creators, they made this metric where they started telling us out of our last 10 videos where this one ranks as far as views or whatever. And the worst feeling in the world is putting your heart and soul and an effort into a video and it comes out and 30 minutes in, it says this is 10 out of 10 as far as views and performance.
10 out of 10 being the worst.
Being the worst. And then on the flip side, when you get a 1 out of 10 for no reason other than luck or rolling the dice or whatever, because you still put your same heart and soul in that you did 10 videos ago, it comes out 1 out of 10. And you don't think to yourself, oh man, I made a great video. This is going to be awesome. People are going to get true value out of this. The only thing we start to think about is, I need to make a video just like that. I need to do that video again with a different stock or a different title. And it's hard because, like you mentioned with the penny stocks, you're not against penny stocks. Sometimes you find a really good one and you're happy about it. So it's not a situation where you're like, I'm JJ and I should have never talked about penny stocks. But when you made a good penny stock video and it came out 1 out of 10, you're like, oh, YouTube loves me because I make penny stocks.
Yes.
So now I'm going to start looking for other penny stocks. And then it builds off each other. And then a month later, now you're just making videos about random penny stocks that you're finding. And you're like, damn it, that's not who I am. And I think that's the moment that we're having. And we see this, guys, so through the comment section, and we even got a couple of voicemails that we are going to get to. We kind of had to make this video first getting into those because we get voicemails from beginners, or we have beginners in our Discord, and they ask us things that are just, they're fearful, not because they're dumb questions or we're like, this person is an idiot. And like, that's why we haven't released some of those yet, because we didn't want them to think that we were belittling them. But it was more like, you got some really, really, really bad information. Yes. And we need to figure out a way that we could fix that for you. Or we need to, like, it's kind of, I'm a high school teacher and sometimes kids ask me questions and I'm like, you can't be asking that as an 11th grader. Like you can't be, as a physics student, you can't be asking me what a meter is. Like, you just can't do that, and we get questions and comments, and luckily we have that. Luckily we have each other and other people in the space to bounce these ideas off of. And it has nothing, we don't give a crap what other creators are doing. We really, really don't. This is not like, wow, I can't believe this creator did that again. We don't have those conversations.
No.
We have conversations of, hey, did you read this comment? How would you respond to this person? And like, it's all from a background of education and how can we make people's lives better? We don't care if you are the load up on this stock. We don't care about that. Do you, boo-boo? Like, that's fine.
Yeah.
We're more concerned with what is the legacy that we are leaving personally. And that's kind of why we love the podcast, because it was an outlet for us to go back and talk about Dave Ramsey and to go back and talk about index funds and retirement accounts. And then we're like,
because we're not getting a 1 out of 10 or a 10 out of 10 of these podcasts. We just know that we're just putting them up for everybody to listen to, and that's it.
Yeah, there's no analytics. There's nothing. We can literally be ourselves. And
it's amazing.
And also there's no comment section. So there's no haters and there's no trolls. And this platform is just awesome. And we said, okay, well, maybe we could take some of this, what we learned here in the podcast in the last 3 months, and we can start to go back to being the average guys and the average people we were. And we'll sleep better at night. And you mentioned in your videos, are you going to take a financial hit? Yeah, you probably are. Your views are going to go down. You're not going to be getting 2,000 subscribers a day. You're not going to be getting 5,000 comments per day. But it's like we were shaking our butt for the YouTube algorithm, and that's not the people that we really want it to be.
My reputation is so much more important to me, but also helping people out in the right ways than making a few extra dollars from views on YouTube.
You're a smart dude. You could always go back to work with your reputation before you ever I would much rather people be like, oh, you gave YouTube a shot and you failed and had to go back to your W-2 than people whispering like, what? Remember when he used to talk about Vanguard?
Yeah.
Like I said, and this is not putting ourselves on a pedestal. I don't think I'm high and mighty. It's just, we needed just to vent, I think, a little bit. We still love YouTube, but we just need to vent and let people know, because we know that because this platform, Average Money, is based around that. And we don't have those YOLOers and those option players necessarily listening. Granted, our supporters are very, very, loyal to us, but somebody traveling through this, and we talk about this all the time, back to no analytics. If you found this podcast and you did not know we had YouTube channels, like if you organically found about, please email us. I want to hear that, because we don't know. We have no idea, but and maybe at the end of this episode, we'll tie this up with just briefly running through. I've done a portfolio breakdown of what I'm investing in, and I think people are getting an idea. If you've listened to a couple episodes now, you know the type of investors we are.
Basically what Brad's saying is we really want this podcast to work out because we absolutely love it. So if you could share this with your friend or whatever it may be, because we really want this thing to grow. No, to be honest, guys,
we would quit YouTube. We would quit YouTube.
Oh, 100%. 100%.
This is 100 times better than YouTube.
Because
I'm not wearing any pants right now.
I am maybe in underwear. But seriously though, you and I are having a regular conversation like we'd have when we call each other, it's just like this, it's just recorded and it's some little longer form content, but I feel like I can be myself so much more through the podcast. I don't know, man. It's just,
and I know even my options. I know Aaron Azevedo right now is shaking his head yeah, these guys, that's right, man. He's not thinking, oh, this is another I hate YouTube video. Because those types of people know or are getting to know who we are deep down inside.
Yes.
And those are the people Chris Kelly had this great article, the 1,000 True Fans or whatever. And that's really what we care about at the end of the day. It's great to get on and talk about subs and views and things like that, but I mean, the Discord is another great example. I'm finding people and friendships and trust in people that the only common ground that we have is that we want to help people with money. But unfortunately, if you want to be a YouTube creator, I know some amazing YouTube creators that aren't making stocks to load up on content, and they're not growing because of it. And it's super frustrating.
It is,
like
man.
like Quentin Q makes it happen. He does incredible content, but his is never going to go viral. You know, talking about collecting change and saving up money and taking care of his daughter. Like nobody gives a shit about that. I do, but
right. No, I mean that's the thing though, dude. That's what sucks about YouTube. It's man, it's such a tough spot to be in, and I don't know, man. Like, so here's my thing moving forward. For those of you that didn't see the video, so I've been doing a Robinhood challenge on my channel, and another thing I kind of goes back to the whole like beginners watching my channel is they may see my Robinhood portfolio, and they may not understand that like I have many other portfolios out there. I have another longer term portfolio. I have my retirement accounts. I have my wife and I's personal brokerage account, whatever it may be. I can't say that in every video. So these beginners that see my Robinhood portfolio and they say, oh, okay, JJ has 6 stocks in his portfolio. 2 of them are penny stocks and 4 of them are SPAC stocks. And, he's got some YOLO options trades going on. I do try to say like, hey guys, this is, everything in here is pretty risky, whatever, but I don't think I'm doing a good enough job. So I think the best thing for me moving forward is I will still have my speculative place, my more risky investments in the Robinhood portfolio, but I'm actually going to start having my dividend videos come back, which I miss. I do love my good dividend stocks, man. You can't beat it. And I'm going to have all that in the Robinhood portfolio to be able to showcase like, hey, here's this, here's VTI, here's VOO, here's dividend stock, Pepsi, Apple, whatever. Here's my few spec plays, and I can discuss each one. I just feel like that's the best way I can do it to still try to get some views. Because again, YouTube is my job. I have to get views, but also still teach that very important point that, not everything in here is a spec play, because you need to be able to diversify correctly and to understand exactly what you're getting into with every investment. But also, there's not enough like how to read a balance sheet. No one in YouTube anymore talks about how to value a company. I guarantee you half the people watching these penny stock videos don't even know what a PE ratio is. So that's the scary part too about it, man, is like, I want to bring it back to the basics. I want to let these new investors get a better understanding. Now, enough about me, enough about, us and the struggles we're having with, creating content on YouTube. Brad, do you have something you want to add to that real quick? Because I do want something else. There's something else I want to bring up, but go ahead.
Yeah, no, because you mentioned that the PE ratio, and I think I'm getting a little bit more views and recognition for my options videos. And when people ask me all the time, like, what option, what would you do? What would you do? I'm looking to do this. My response now is, explain to me what a bid-ask spread is. If you can tell me what a bid-ask spread is and what it means, then I'll give you that answer. Because simple things like that, if you can tell me what delta and theta represent, then I will start to talk options with you. Until then, you're just putting a chip on number 35 and hoping the ball lands in 35.
So
and
true.
It's people like, oh, what's the best stock to do leaps with? What's the best stocks to do the covered calls and the wheel strategy with? I'm like, okay, well, to do the wheel strategy, you need to collect premium, and premium is built on intrinsic and extrinsic value. Can you just give me a rundown of those quick and what they mean to that option? Then I'll talk about it. And that's not like me like flexing my knowledge. It's a protection. Like, that's a way that I'm protecting that and they get frustrated with me. Like, yeah, I didn't know that you were going to, like, that's a protection. Like, people get mad that in my option videos, they'll be like, options is so much harder. Anybody can buy a stock, but you need permission from the broker to sell options. Like, that's for your benefit.
Yeah.
You need permission to sell options because you can F yourself royally. That is not a con against options. The fact that you need level 3 options capabilities to be able to sell a debit spread and do the poor man's covered call. Like, that's a pro for you. The fact that you can just get on and day trade penny stocks, that's a con for you. So like, you're so right. People just, and it's not saying like you need to go back to school and learn everything, but there's just these fundamentals, these things that you need to understand before you start. And this goes back to the early days. I think I heard Ramit Sethi say, whenever somebody comes up to me and is like, if you had $1,000, how would you invest it? And he goes, if you're asking me that question, the answer is go buy a book. You shouldn't be asking me what to do with $1,000. If you're intelligent enough in this space, you would know what to do. I'm not going to tell you what to do.
And I also want to add this, that to go back to the beginners, I was in their shoes. Brad, you were in their shoes. Yeah. I remember being that like
not too long ago, JJ. Not too long ago.
Yeah, I mean, I remember being like, okay, so I remember I bought my first stock in 2014, right after I graduated college. No idea what I was doing. No effing idea what I was doing. But the first thing I went to, actually, my first stock was an oil stock that tanked. Like, no
mine
pun
was
intended.
Apple. It had to be. Mine was Apple.
Well, that's a good buy. But then, as soon as I bought that stock and lost like half my money, I started searching, like penny stocks popped up. And I started looking into penny stocks and like, oh, okay, how can I double my money? Like that's just like the first, I feel like that's like the beginner thing you have to get through, and you got to lose a little bit to understand. So true. But that's the important part, man. Like when people get into the market, you just think of stock as a price. Like somebody may look at Amazon stock that's priced at what, $3,200, whatever the hell it is, versus Zomedica, which is a 90 cents right now a share. They'll be like, oh God, I'll go throw my $100 on Zomedica, get 500 times whatever it is the amount of shares, versus buying a fractional piece of Amazon. I'm way better off doing that. But that's not quite true, because the price doesn't matter, especially now with being able to buy fractional shares.
There's no cheaper, expensive stocks.
No, you look at the valuation of the company. You need to look at how many outstanding shares there are. That's the stuff you got to look at, because based on the amount of outstanding shares, the market cap of the company, how many you may have a company that has, I can't think of a number right now, but way more outstanding shares, but makes the same amount of money as company Z. I'm butchering this example right now.
It's fine. I'll give you one. Coke versus Pepsi. Coke has so many more outstanding shares than Pepsi, so everyone's always like, Coke is a cheaper share price, and I'm like, okay, but if you slice up the pie, outstanding shares, you're actually getting a better value per share if you buy one share of Pepsi, because you're getting more ownership of that company because there's less outstanding shares out there. That's what I just know, because people hate on me because I like Pepsi over Coke. Coke has millions more outstanding shares than Pepsi does, and because their price is diluted, so it's quote cheaper. So people say, "Oh, it's cheaper than Pepsi." No. Like the slice of their pizza pie is sliced up more. So like one pizza's cut in 16s, the other one's cut in 8s. I'd rather have the 8 for a little bit more money. It's not double the price. Go ahead. But a Coke and Pepsi is a good example of that.
Yeah, you nailed it. Like, that's the stuff that, like, again, it's hard to understand as a beginner, but that's why you just got to take the time to look into it and understand exactly how to value a company and why this stock price is so much higher than the other and, their competitors or whatever it may be. But so to kind of jump ships a little bit with the market, what's happening now? What's kind of your prediction over the next couple years, like let's say 2 years? Where do you see the market? Where do you think this is going? Like, what's kind of your thoughts on everything moving forward?
So I love the fact that you use the word prediction, because that's all it is. And this may sound cliche, and I try and make this clear to everybody, whether it's my brother or somebody on YouTube. I personally do not care at all what the stock market does in a 6 month to 1 year to 2 year period. I will only care about that when I approach retirement and I feel like I may need to start to live off my investments. Other than that, I make solid, blue chip, non-sexy investments that are going to go up between 6 and 8% like they do traditionally. And yes, Johnny YOLO might make 20% this year, and he might make 50% next year. And he might make 120% in 3 years, but I'll talk to you in 25 years because I do not think that you are going to be able to do that. So because I make my regular investments, automated most of them, and I dollar cost average them because they come right out of my paycheck or because I know that I'm doing it on the first of the month, I do not care. I don't care about the crash of 2021. I don't care about the bull market of I know that people are saying that the market is high. I know that it's been going up, and I do know a little bit about statistics, and statistics say that the likelihood is to trend towards the average than to trend away from the average, and we use this in implied volatility graphs when we're trading options. But right now, we are way above what the average returns of the stock market have been historically. So every single day, there's more of a likelihood for it to dive down to the average. So, yeah. But you want to know what? When that happens, here's the only thing that changes for Brad. I wake up, I make my investments, and the stocks that I buy and the mutual funds that I buy, they're a little bit less expensive that day. And you want to know what? And then it shoots up and it YOLOs. And next month, like somebody told me the other day that VTSAX was selling for like $98. I was like, the last time I looked, it was like 50. Like what the hell happened? And that's great news. But like I'm that far removed from the share price of VTSAX.
I don't even look at the share price of mine.
Yeah, because it's just I'm not gonna stop. I'm never gonna say to myself, VTSAX trending pretty high right now. I'm better not invest in it.
2 quotes from that, Brad, that kind of come to mind. Slow and steady wins the race. You kind of
Nate O'Brien today in your comment section.
Yep, that's exactly what made me think of it.
Yeah.
It's so true though, man. Like it's the tortoise versus the hare analogy. Like, you can have the guys who are YOLOing and doing all this, and they may make a big buck, here or there. But what's going to happen 30 years down the road? Slow and steady wins the race. If you're an investor, which I'm actually very excited for maybe the next episode, maybe 2 from now, it depends on how everything plays out. We're going to have my brother, my kin, my brother, my blood, he's going to actually be coming on here because he just purchased his first stock not too long ago, like a couple days ago. He called me about it. And we thought it would be a good idea to have him on to kind of get like a beginner's thought process of the current stock market. And I told him, I was like, Josh, no question is a dumb question.
Yeah.
Because I want you to ask me whatever you think about as a beginner. Because I was there at one point.
And we're a little far removed from it now.
Absolutely.
Like I don't know what people entering the space that know nothing.
Yep.
I don't know what they're thinking.
We also weren't entering a market that was 10xing your money as soon as you put the damn thing in there. That is what's so crazy.
There was no Bitcoin when I got in.
No. Yeah, I know, man. It's crazy. But here's the other one. I really do like this quote too, and it's time in the market beats timing the market. Summing that up, it means we're not in and out of all of our positions. We're not trying to time it when it's up, buy low, sell high. We're not doing all that. We are literally buying and holding. That's really what we do. Like when I look at a stock and I'm looking to hold a stock for my long-term portfolio, I look at that stock first at the valuation. I look at the balance sheet. I look at the overall financial healthiness of that company. I look at the brand, if it's a pretty strong brand, or I look at the potential if it's a growth stock. Maybe it's just a newer company, but I can see the potential. Those are the real main things I look for. But then once I make my initial investment, and maybe I'll buy in a little more here and there, I'm not selling it. Unless something catastrophic happens and the company goes to bankrupt, that's kind of where I'm at on that.
That's what I was just jotting down. I was like, once you do that research and you decide that a company is long-term, like I would say I probably own about 20 stocks. More than half of them, I don't know what their current share price is.
Yeah.
Because I've already done the research and they're a company that, like, for example, like Disney. When I think about Disney, I'll check in on them maybe quarterly or if like something pops up in the news. But I've already done the research to say that like this is a company I'm going to invest in. That's why we loved that episode where we got to talk about our favorite stocks. Because that is something that we cannot do on YouTube right now. We can't do it. And we're laughing at ourselves because we know that we've become the puppets a little bit. And we're kind of making fun of ourselves.
We are, man. I mean, it couldn't be more true that what you just said. Like, YouTube has us, they got us locked up.
Yeah.
It's the truth. So I am though, man. I'm excited to see the channel change. I'm going to still have some more speculative content come out, but I'm also going to have my longer term content all in my Robinhood portfolio together. So it'll be nice. But
because you want people to see the spec plays with VTI right next to it.
So true. And I want that to be my largest position in my Robinhood portfolio. But let me ask you this, Brad, and I'll answer this too. But if you are a beginner listening right now to the Average Money Podcast, and you are watching the YouTube videos and you're seeing the YOLO plays and you're watching the penny stocks and these all these new SPAC companies that are coming out in 2021. If you could, how do I quote this? If you were a beginner, because I don't want to tell you like to go tell this guy how to invest, but if you could go talk to Brad Finn, who is a beginner, let's say right now in the stock market.
Yeah.
What would you tell him?
Yeah. So like, you mean strategy?
Yeah. I mean, like, well,
Okay. Yes. I know. I think I know what you're saying.
Yeah.
I break things down, and we've talked about it on this podcast, where speculative investments are a good thing for us. They make us feel alive a little bit. But life is all about understanding that risk tolerance. And if you want to do that, do it. But do it with a small percentage of your portfolio. Do it 5%. You want to go into ARK because Kathy Wood is a genius? Good. Do it, but have that foundation behind it that it doesn't matter what your spec plays do. And I mean, definitely don't listen to YouTubers. I mean, maybe
yes.
I mean, you can maybe go on and see what we're doing, but I don't talk about my stocks and hope that you invest in them. I talk about my story that I hope you can relate to, and we can earn some trust together. And then we can have conversations about what you're doing. And you can ask me questions like this, because the whole, I have to respond to people. I'm not a financial advisor. But if you say to me, hey, Brad, I'm just curious about your opinion. If you were in this position, is this a disaster? And I'll always protect people when I can. I'll always give my 2 cents when I can. But I also understand that I'm kind of like an old dude sometimes, and some people don't have the contentment that I have. If you want to be a boring VTSAX long-term index fund investment, you have to be happy with who you are. You have to be happy with the fact that some people are going to do better than you in the stock market. Some people are going to be Tesla millionaires. And I got into Tesla. Some people are going to do that, and you clap for them. They won. Good for you, bro. I don't hate on Meet Kevin because he's a Tesla millionaire. I don't hate on the Winklevoss twins because they got into Bitcoin when it was $20 a Bitcoin. I'm happy with the things that I did. And what I did is I have these books in front of me, the Boglehead's Guide to Investing, the Simple Path to Wealth, the, Choose FI podcast, Quit Like a Millionaire, Playing with Fire. I have all these books that set the foundations for long-term investing. And yeah, maybe if I would have tried to YOLO and I would have been a little bit more heavy on my spec plays, maybe my net worth would be up 10% more. But I'll tell you this, I don't give a shit if my net worth is 1.5 million or 1.75 million. I don't care if I have 2 million versus 3 million.
That's so true.
I don't care if I have 400,000. I don't care if I have 100,000 versus 300,000. I don't care. Because 100,000 is great for my family. My kids eat. And this, I don't know if you've ever seen the movie, JJ, if you've ever seen Rounders before. It's a poker movie back in the day. Matt Damon was in it. And there's this older guy, Kanish, and he's like, Matt Damon's like, and his guy's back up against the wall, and he comes to this older guy for money. He's like, yo, I need some money, blah, 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 blah. And he's like, nah, man. He's like, I've seen you just YOLO this away. I can't do it to you anymore. And he's like, I'm the one with the stones to try. You never had any stones to do it. And he looked at him. He's like, you little punk. He's like, I have rent. My kids eat. I pay alimony. I'm not a YOLOer. And there's some times where I feel like I'm in the YouTube comment section And I'm like a kid said yesterday, he's like, oh, you know nothing. I'm like, okay, man, I don't know nothing. I'm like, I think I gave him an okay boomer. And he's like, I'm 19, but I'll take that as a compliment. I'm like, that just makes it even more perfect.
Yeah.
And like, I can't even hate because I was a 19-year-old asshole. I've been a 35-year-old asshole before, you know? But at the end of the day, YouTube aside, my index fund investing, my kids eat. I'm going to be, I'm going to be living it. I'm doing great things. I'm financially independent. I get to make podcasts for fun on a Saturday night, you know, for no money. And some people are going to bed tonight wondering what's going to happen to their penny stock on Monday. I don't have to worry about that.
Dude, it's facts, man. I will say this to kind of reiterate on what you said earlier. It's so true as like a content creator. We're not wanting you to invest in the stocks we're talking about. Like, I'm just telling you what I'm doing. Now, there are other creators out there who are doing that, but
we're storytellers, JJ. That's it. We're storytellers.
Yeah.
We're trying to show you what a guy from Missouri and what a guy from New York is doing. And the chances that we take, the good, the bad, the ugly. You know, I mean, I made a video about Peloton stock. You know, people lit me up about that.
Yeah, I know.
Meanwhile, that stock bought me a freaking Peloton.
And here's the thing.
So go for it, bro. Hate on me for Peloton. It bought me one. Have at it.
I want this though. Like, it takes some balls to promote your full portfolio and what you're doing in every move out on YouTube for hundreds of thousands of people to see.
Well, for you.
Well,
for me,
you're getting hundreds of thousands of views.
For me, it's 5 to
get the hell out of here.
5 to 10,000 people.
No, you're getting hundreds of thousands of views too, my friend. But no, really, what I wanted to kind of wrap this up on is just the importance of the foundations of investments and investing in the stock market. Hit those retirement accounts first. Your tax advantaged accounts is where your number one spot should be. I get people ask me all the time. You know, it's funny. I'm getting a lot more of like calls and texts and messages on Facebook from personal friends and family. And they're all like, oh, JJ, I know you're in the stock space. Like, what's the next big stock? That goes back to what we've been talking about this whole video. You know what I mean? I'm like, well, let me ask you this. Are you investing in a Roth IRA? And they're like, what's a Roth IRA? I'm like, okay, what you need to do first is you need to sit and you need to open up that Roth IRA.
Mm-hmm.
You need to invest in that. Once that's fully funded, once that's fully maxed out, then you can maybe think about, buying some stocks or whatever it may be. But whenever I tell people like, guys, index fund it's good. It's passive investing. And I'm not, trust me, my brother ain't maxing out his Roth IRA and he's buying stocks, but he's not buying, he's buying a very small amount. So like, I'm not saying you can't buy stocks until your Roth IRA is fully funded. Like, you can do whatever you want, but
my brothers invest in like weird shit that I would never invest in. I don't hate on them.
Yes. Yeah. Like, you can do it. It's just
my brother's biggest holding is like Penn National Gaming.
Oh, I bet he's doing good though.
Dude, he has it at like $19.
That's one, man, that got away from me that I wish I would have invested in. I think I've told this story on here before. Me and my old boss was sitting in our office looking at Penn's National Gaming at $3.50, $3.50, and we were going to unload about $5,000 into him. Now it's up to like over $100.
105 on Friday. Don't bet against Dave Portnoy.
I'll never bet against Dave Portnoy.
I kind of want to wrap it up with this, and I don't know where I heard this from, but I think John Scholler, he said something, and I'm speaking to a beginner. Speaking actually to anybody, not even investors, anybody in life, anything you try and do. If you are being judged or criticized about the decisions that you make, that person, I guarantee you, is not doing better than you. People that are doing better than you are doing better because they listened and learned from people, and all they want to do is share that love with you. Now, will they set you straight? Yeah. But they will not criticize you. People that criticize, people that hate, people that troll and judge other people, they don't make it. So if you tell somebody that you invested in this company, or you're going to try and do this, or you were thinking about this, and they laugh at you, or they belittle you, or they say that you're an idiot, wrong person to listen to, because right then and there, you're already doing better than them. And it's so cliche that I end my videos with stay positive, work really, really hard, always be kind to other people. It's very simple. If somebody's being really kind to me, or if somebody's trying to teach me something, I know instantly. I'm a good judge of character. I know instantly that that person's doing better than me. Because if they weren't, they wouldn't take the time to teach me. They wouldn't take the time to pay it forward. And I think at the end of all this, we want you to know that those are the types of people that JJ and I are. I'm not going to criticize you for YOLOing. I'm not going to criticize you for selling penny stocks and getting into options and YOLOing. But what I am going to do is I'm going to let you know that there's probably some things that you might want to consider first. Simple as that. JJ, anything to add, buddy?
No, man.
Did we really even say anything?
Not really.
The last hour. Sorry, guys. This was for us.
It really was. I mean, to sum everything up, it's just know your foundation, what you're getting into when you're getting in the market and when you're getting started with investing, period. I don't want to say this to scare you away to not invest, because I think everyone should be investing right away, but learn as you go. I'm still learning. I'm no expert in the stock market by any means. I'm just I'm an average guy that talks about the stock market moves I'm making on YouTube. But the fact that I have 100,000 plus subscribers to my name, I don't know if people just automatically think I'm now this expert. It's just I was able to gain. Maybe I'm an expert in gaining followers. I don't know, but for real though, it's just know the foundations. Understand what's important. And I think if you're listening to this podcast, you're kind of in the right. I really do. I think you're in the right step moving forward. But just understand what you're getting into and just be prepared. I mean,
if you're watching on YouTube, you see this book, The Simple Path to Wealth. And this is one of the few books that I didn't read, review, and give away. It was a book, J.L. Collins right here. I don't even know what it goes for these days, but what, $25? Probably well worth it. It's a book that you don't want to get an audiobook version of this book. You want to hold this book and you want to keep it. And I read it often, not all the way through, but I go back and remind myself. When I feel myself start to feel like I have to keep up with the Joneses, and for me, the Joneses is YOLOing and option plays and buying things, I go back to this book. J.L. Collins, who's featured on the back here, blogger, multimillionaire probably.
We need to get him on the podcast.
J.L. Collins, buddy. I'll get him. Actually, you're the one. I'm more in touch with the blog space. I'll get J.L. Collins.
You are.
But it's not about even getting him, because what I meant is, if you are brand new and you're like, this book right here, stupid what it will do for your future. It's stupid. It's not going to get you the biggest returns ever, but if your goal in investing is getting to retirement and knowing that you are set for life, I don't know. That's all I got to say about that. You got anything else?
Yeah.
Should we get out of here?
Yeah. I mean, I think they've heard enough of us rambling on. This was definitely a different episode for us, guys, but I remember I did. I'm going to be straight up. I've been, Brad and I talk on almost a day. We talk on a daily basis. I've been struggling with some things, just as a creator, as what's going on in the market and what I've been doing. And I just said, Brad, I just got to vent a little bit. Mm-hmm. Let's just make a little episode about this. So
we got a million episodes to go. So this is
yeah, man. We're gonna be around here for a while, dude. This is one of the ones that's just kind of we may have these in the future. We may have them where we just want to vent, or maybe there's something big going on we just want to kind of give our thoughts on, but. I
quoted Christina Perry to you before. We're only humans. We bleed when we fall down. Some days we're going to talk about stuff that is affecting our life. And even if it's not directly tied to money, our life is directly tied to money. And I'm sure there's going to be people out there, whether you're a content creator or whether you're just feeling like you're paying off debt and you got to keep up with the Joneses or keep up with your friend or something like that. You don't need to do that. And we'll get back to laughing and giggling and crushing beers in future episodes. But no, I think these are good. We're real people, man. And if you're listening and you're like, I'm never listening to these guys again, they're a bunch of whiny jerk-offs. But we do have a Discord if you want to come. I put a chat in there just for episode reactions. I would love to hear. I know there's going to be, our real ones already that we've already started to create over there. I'll leave a link to Discord. And if you want to support on top of that Discord, you can, throw us $2.50 a month and become a Patreon member. But free chats over in the Discord. JJ and I are in there all day, literally all day, answering your questions. And, before we get out of here, and just because, like I said, this is all about you, we love the opportunity to showcase one of your reviews. If you listen on Apple, it's one of the only places that actually has reviews. If you listen on Spotify, you can follow our channel. That's another way to help us on Spotify, because people ask, there's no reviews on Spotify. But on Apple, that's literally the only metric that Apple uses to push podcasts up on their search ranking, is how many reviews do they have. That's it. That is the only metric that they use. So please, even if you don't listen to us on Apple, you listen to us on Spotify, shoot over to Apple, leave us a comment. And I think JJ wants to share one of those comments that we'd love to share. If you leave one, I think we've gotten most of them, but they're coming in and we'll get to them. We only have so many episodes so far, but JJ, I would love if you'd read a comment that we received recently.
Yeah, so we actually have gotten quite a few more recently, so I'm kind of falling behind a little bit. But the one I want to read today comes from RJW333. It says, "Finally, I feel understood." It says, "I am a high school teacher and a previous spender in my life. Swipe, swipe, swipe. Financial literacy is my new hobby and study. In doing so, though, I found it hard to find something that I felt understood where I was coming from or going through until now. Dave Ramsey is a great starting point, he is, but the Average Money podcast is the gas and fuel to keep on going. In short, it is the right amount of support, humor, and education to feel like, hey, someone understands what I'm trying to accomplish, and I'm not in this alone. Very grateful, guys. Keep up the good work. I started with $88,600 in debt, and now down to $32,000.
When did that come in? I didn't see that one yet.
Thursday.
Oh my God.
Solid, right? We actually got a few more, man, that I been kind of slacking on. So we got quite a few to catch up on.
Are people are starting to find us outside of our YouTube channels?
Yes. It's crazy.
Dude, that review is sick. And
That was
you want to know
great.
what too? Like, I hope, did you say it was RJ you said?
RJW333.
I hope, sir, that you leave us a voicemail when you become debt free, and we can
Yes.
and we can celebrate that win together, because the voicemails are great. And if you listen on Fridays, that's when we put out voicemails. I love hearing people's voices and dialects, and they get to tell a little joke. When you become debt free, I beg you, sir, or miss, or madam,
Or, yeah.
please leave a voicemail and say, hey, I was that review back on the January 24th podcast. I'm debt free. I knocked out the rest of that 32 grand. I would love, you'll make my day.
Mine too.
All right, guys, until we see you on the next one, look at index funds. Make that be the core of your investment strategy.
Hang on. Average Money's next podcast. The next penny stock that's going to 5X.
Oh, yeah. Guess we got to save that penny stock episode for a couple of weeks. Yikes. And
Man.
leave a comment in JJ's comment section and call him Justin. That's how we'll know you listen to this episode.
Yes.
Take it easy, guys. We appreciate you. We appreciate the time and the health and everything we have. And if I keep talking, I'm going to get emo. We'll see you on the next one, guys. Cheers.